Okay, we're live. Wendy, welcome to the podcast. Thank you for joining me.
You're most welcome. Great to be here, Grant.
I'm very excited to talk to you, and I'm very impressed you've been able to command your calendar to be able to take a little bit of time at this point in tax season, because a lot of accountants are really burning the midnight oil these days producing returns, and kudos to you for balancing that out in your own work.
Well, thank you.
Well, why don't we start with this? Could you tell us a little bit about yourself and your background and what you do on a day-to-day basis?
I came to the United States in 1997 with nothing but a bag of dirty clothes. I was fortunate in that I'm from South Africa. I had an education and I had a chartered accountancy license. And I arrived with my bag of dirty clothes. I was fortunate enough to get a job in Los Angeles after backpacking around the world for a year. And I went from firm to firm to firm, learning about American taxes and the finance system. And eventually I said, aha, I can do this better. And so I opened my own firm off the Towers Fell in New York. And it's just been full steam ahead since then. But I'll tell you that I don't suffer excuses, right? I came with a bag of dirty clothes. Everything I have is because I've worked hard and I've figured out how to use the system. And I teach my clients the same thing. So no excuses.
How different is the South African tax code from US?
Well, it's actually not very different. Of course, the devil's in the details, but like anywhere in the world, if you make money, you pay tax.
Pretty basic concept.
Right? So when people say to me, oh, I don't want to pay any taxes, I say, no problem. You could be homeless and live under a bridge. You won't pay any taxes. Great solution.
So what does your work life look like now? It's evolved quite a long way since 97 when you arrived with the
That's
backpack.
for sure, right? So now I do a lot of education. I do a lot of business consulting on the tax strategy side because too many people make their choices based on driving revenue rather than focusing on the tax strategies and the profit strategies. So that's where I spend the majority of my time, is educating business owners on cash profit tax strategies. Yeah.
S corporations, for example, are a great entity structure for a lot of people, but it's kind of confusing when you first get started. How am I paying myself? When do I take cash out of the business? Where do you start when you're educating people?
Usually people come when they have a problem, right? Nobody goes, no, I think I want to be a planner. I'm sure you hear the same thing in your business. I want to have a plan. I want to get ahead. They come when they have a problem. So most often somebody shows up with an LLC and they're frustrated and upset because it's not saving them any money. In fact, it's costing them money. And so that's when I have the opportunity to say, all right, well, this LLC doesn't help you. Now you need an S corporation, and let me show you how this works. So every time I sit down with a business owner that has an S corporation, I insist on a 2-hour training meeting, because even if they've had a CPA before, I'm not sure what they've really been taught about reasonable salary. That you said, that's what the law requires. If you have an S corporation, you must, under IRS law, issue yourself a reasonable salary. Pretty vague, pretty broad, lots of fun we can have there, but it requires business owners to truly understand what the law says and then how broad, how much risk they can afford to take within the law. And that's a personal decision. Every single person I meet has a different risk tolerance. And that's really the discussion that we have.
Should business owners think about when they're distributing cash out of the business bank account and putting it into their personal bank account? We have a framework that we use here for people, but I'm curious to hear your thoughts, because people are always confused about this. I don't want to be overly taxed. I'm concerned about taking it out. I don't want to pay tax on that. When in reality, they're going to be taxed on it either way.
I think that's the problem with S corporations. People don't understand. No matter where the cash sits, it can sit under your pillow, it can sit in the cookie jar, it can sit in your corporate checking account. That doesn't matter for taxes. The IRS does not care for an S corporation where your money sits. So by way of practicality, what I tell clients, we work within the profit first system of cash management. And so our clients all set aside a certain percentage of their deposits every week or every month. So for example, if I deposit $20,000 this week, I will put 10% of my deposits into a tax savings account. I've emotionally divested myself of it. It's going to sit there until it's ready to go to the government. For everybody, that percentage is different. People on the coasts which are highly taxed, usually 15 to 20%. Those of us in Florida or Texas, closer to 10%. And then we send that money out. But please don't leave money sitting in your corporate checking account or in a corporate savings account. I'd love for you to chat with a lawyer about the risk of that. I know for me, and I can only speak for myself, but if I were to get sued, all that a nasty person could get would be what's sitting in my corporate account. So I never leave any money in there. I sweep it out every week to my personal savings. And then in the unfortunate situation where I have a bad month and I have to kick some cash back in, then all I'm doing is just moving the money back in. It's not a taxable event. So your taxable income is revenue earned minus deductible expenses. Nowhere in that formula does it say cash.